Good afternoon, everyone. Today is Friday, the 22nd of June, 2012, and this is Brian Shannon speaking from alphatrends.net. We had a pretty volatile week here, and Thursday, obviously, we had a pretty large loss there in the markets. And, for the week, and well, since I brought up the wrong slide, let's talk about this anyways. This video is brought to you by Realtick. Realtick is the trading platform and the analysis tool that I look at here when we take a look at charts. And this is the table for the week, the day, the week, the month, and the year as far as the returns. And the S&P 500, you can see for the week was down just about 0.5%, and we lost some ground in the Dow. Oil continued to sell off pretty strong, but the NASDAQ and the Russell 2000, semiconductors and financials were all positive on the week, which doesn't feel like it after Thursday. But again, it was a pretty interesting week because we got it back above that declining 50-day moving average, and we were talking about how we can't become bullish just because it's above a certain moving average. It's more important that the direction of the moving average tell us to be cautious. This market, where it made it up to was pretty much we were looking initially at the 50-day moving average in this 134 level. That's been an important level of support earlier in this year. We broke through that and stayed below it, and this level here was the secondary upward target at that 136 level. Now, when we take a look at the 30-minute time frame, you see already I have a bunch of lines on here. Let me just clear those all up so we can kind of start fresh, and we'll actually look at the 65-minute time frame. What we want to note here is something that I had put in a blog post, I believe, on Tuesday, and that is the Fibonacci of the April high down to just the recent low here this month. This market retraced almost exactly 61.8%. So a lot of times you'll see that a retracement level is an approximate area where there might be resistance. But when you take a look at the way that this came into this prior level of support, as well as that 61.8% retracement level, a lot of times we see that when there's a couple things giving us basically the same message that, hey, be cautious in here. It pays attention to it pays to take more notice when there's more than one technical indicator basically leading us to the same conclusion. So we dropped down below the important level that we were looking to see, that we were hoping would hold actually this week, and that was about the 134 level. That was the basis, and let's clear these lines off again, the basis of this inverted head and shoulders pattern, which we had begun observing before the right shoulder was actually formed, and then we saw it break out. And what I was cautioning last week is it's nice to see that we have this bullish setup occurring, but we can't just automatically become bullish. We have to remember that there's other levels where the market might encounter resistance, and what's not the important part is of breaking the 134 but staying above that level. And obviously this week the market did not do a good job of that. It fell back down through it. Now, what I think is a very real possibility that could be developing here with this declining 50-day moving average is that we could continue up maybe a little bit up towards that 134 level. And if the market cannot get back up through there and hold above that 134 level, because that's also, you can see where we have this declining 5-day moving average now. If it gets up towards that level, maybe on Monday or Tuesday, and then begins to turn lower, I think that this market could kind of come apart a little bit. That is because from the failed move at the inverted head and shoulders pattern, we could see a fast move lower. Thursday we had again a pretty strong sell-off, just strong and steady as it broke that 5-day moving average, some support, and now we want to keep an eye on, can it get back up above that 134 to 134.5 band of prior support or resistance here? Can it get back above and hold above that level? If it can do that, then we'll be more neutral. If, however, it gets up towards that level and begins to turn back down, then we have to be concerned that there's the possibility of a faster downward move coming. Another thing we're going to want to keep an eye on is the volume weighted average price since the event. The event this week obviously was the Federal Reserve, and you can see here that I just drew that line straight across from where that Federal Reserve came out, and basically the average price since then is about 134, adding a little bit more significance to that level. So 134 to 134 and a half early next week. If we can't get back above that, then I think we have the possibility that we begin to break down, and we'll see, about 131 and perhaps even a test back down of that 200-day moving average, which is in about the 130 level. It's possible too that we could test these lows, but the 50-day, or I'm sorry, the 200-day moving average seems like it might be a reasonable downside target in the S&P 500. If we get back above 134 and a half and stay above there, then I think we'll just be a little bit more neutral maybe. So we're still very iffy in here as far as where this market can go. This this is, as far as people who look at the candlestick formations, this isn't the type of week that you want to see with this big long tail, and I believe they call it a spinning top. We don't want to stay focused on one candle or one day's action, but how does it fit in with structure? We had seen this pattern of higher highs and higher lows interrupted just a couple days ago, and then as we broke support, now we want to see, we want to be very cautious below this declining 5-day moving average. The 132 level has had some significant volume, but I think if we start to break back down, that we'll probably see about 131. The NASDAQ was up slightly for the week. Let's take a look at that again. We're up about 0.5% for the NASDAQ. So again, it might not have felt that way because of the large move down on Thursday, but we did get back up to this prior support in the NASDAQ and just above that declining 50-day moving average, again telling us why we want to be aware of the direction of these larger watched moving averages. But 63 to 63 and a half was our band of support, prior band of support, which was resistance, and now we're kind of back right into that neutral territory where it's tough to see what might actually happen in here. I do think in here we also have to be aware of the volume weighted average price since the Fed. That's at about 63.50, so adding a little bit more significance to that level. Early next week, I think we're going to want to watch that 5-day moving average. If we're unable to get back above and hold above that 5-day moving average, I think we run the risk of a bigger sell-off to at least 62, if not a little bit further down, where this market might even for the first time come test its 200-day moving average. The Russell 2000, we had gotten above a key level this week for a little bit, and that was that 78 level that we've been focused on for really months now. This was the basis of an inverted head and shoulders pattern as well. We see that, and we're back into this range of 75 to 78. So let's just clear all this stuff off here again, and let's look at the 10-minute time frame. We came down almost exactly to where this market began an upward move late last week at that 76.50 level. So if we find some resistance at this 78 to 78 and a quarter level, and this 5-day moving average continues to head lower, I think that a short sale down with an expectation of at least 76, probably 75 to 76 would make sense for next week. If, however, we get back above and hold above 78, then I think we're going to turn a little bit more neutral. The semiconductors, last week we were talking about, this group looked like it was the easiest trade in terms of a target to possibly, buy it above $32 a share with a first target of that 50-day moving average and perhaps up to the $33 level. Obviously, we didn't make it up to 32. We did make it up to that declining 50-day moving average, and then the market pretty much got smashed from there. We came right down to the beginning of this move in here as well. So we retraced really a bit too much, I think, for this market to to think that it's going to recover. We're just below that 32 level, so we want to see 32, really 32 and a quarter. That if this level holds as resistance early next week, I think we're looking at another candidate for a short sale, and stop probably up near about 32 and a half. But let's see how it behaves on Friday, on Monday rather. We'll want to keep an eye on what will be the 2-day volume weighted average price to look for a potential opportunity downside. I think you're looking at least 31 bucks a share for that downward target. And then, we'll see how it settles in here. It's, the market is searching for stability is the most bullish scenario you could make, is that we're searching for stability. But right now we're not finding we're not finding that stability. We have to see if it's, it just needs some time to prove itself. Financials made it right up to their declining 50-day moving average and experienced a stronger sell-off on Thursday as well, with like the rest of the market. We're still holding above what we thought was an important level of 14 and a quarter. You can see that it's kind of right on that line right now. And 14 and a quarter isn't meant to be a literal number. Here we've got 14 quarter to 14.35. We're right at the 5-day moving average. The 5-day moving average is curling over. We've got this prior little support here at 14.40. So I think about $14.45 early next week is going to be an important level for this market. If it can get above and hold above that level, then perhaps it turns more sideways on the daily time frame and digests and consolidates a little bit further. However, if it continues to act as resistance in this area, then I think you've got a sell-off that should see these financials down probably towards the low end of the range that we'd seen recently, which would be about $13.80, somewhere in that area. The markets are still really kind of vulnerable here, and you got to take it just a couple days at a time and be ready to shift gears quickly. We're seeing a lot of important technical events that are closing for 2 days below the 200-day moving average, closing above the 50-day moving average for 2 days, and we're getting some whipsaw in between there. We're seeing the breakout and the failed move back below that neckline of that head and shoulders pattern, inverted head and shoulders pattern. So there's still a lot of mixed messages in this market. Again, I'm going to remind people that even though I got emails that says contrary, technical analysis is not a science. It's not a precise science. There's an art to the analysis. A lot of it is subjective. You have to be ready to change your opinions, and it's a guideline, a guidepost to tell us where does the market have the potential to go? What are the key levels where events might take place, change in supply and demand? This week it was actually pretty good with this prior support acting as resistance, which also happened to tie in precisely with that 61.8% of this prior move. Now, it's not going to work that way all the time. Some people will tell you it will. It simply will not. It just happened to work very well this time, and it pays to know what are these potential levels of support and resistance where the market supply and demand dynamics may change. So hope everyone has a good weekend. Thanks for tuning in, and that'll do it for today.